Gentlemen, welcome back to the channel. Tesla stock had a huge day today. Today was monumental for Tesla stock and what I believe is coming next, which is a very large rally. The fact of the matter is we finally broke above $367 per share on a very strong move and a strong close. There was a lot of orders at that level. A lot of sell orders, a lot of buy orders that were loaded up on. You just blew through the order book at the biggest technical level we've had all year. This sets the stage for a much larger rally in Tesla stock, and we will discuss that alongside my views on the rest of the markets throughout the end of this year and 2026. Ladies and gentlemen, this is going to be an exciting video. We also have about a 3-minute long clip from Tom Lee that I want to share with you as well, because there's a lot of insights that you can get from Tom Lee. So hit that like button, subscribe to the channel, and let me know your thoughts on this down below in the comment section. Okay, so first and foremost, as we talked about in the video that came out at 4 p.m. today, Tesla stock went up so much today. Really, I think from a combination of factors. But I think the biggest news recently that came out yesterday is Tesla has officially gotten approval to test robotaxis in Nevada, which basically means Las Vegas, okay? Which that is big, that is important, that is showing the robotaxi continues to scale. And the fact of the matter is, Wall Street's investment narrative around Tesla has had really nothing to do with robotaxi. Like a lot of Wall Street, they go on CNBC, they go on Bloomberg, they go on the Schwab network, they go on all these networks, and they talk about the auto business. That is not the reason to invest in Tesla. Okay, as Robin Denholm said today, that Tesla is embarking into a new business, right? They're completely reinventing themselves and leaning all in on AI. And she said this today in about a 20-minute long interview on Bloomberg. And up until today, it seemed like a lot of Wall Street, while they were slowly starting to catch on to what Tesla was targeting and the vision for Tesla, ever since really Tesla's last earnings, things have gotten a little bit more bullish for Tesla from an institutional perspective, covering on short positions, getting more bullish option activity, adding positioning to the stock from Wall Street. But today it seems like Wall Street is starting to actually look at Tesla like an AI company. So those are the two big things that really happened today. I think more from a technical perspective, getting above $367 per share was big. There was a lot of orders at that price, at that level. And now you're back to like the breakout level you had during the post election rally. And I think it sets us up for substantial upside from here. Keep in mind, we are in September. It's only September 12th, so we're technically not even halfway through the worst month historically for the markets, like ever. September is by far the worst month. No month even comes close to how bad September is, okay, on a historical basis. There's going to be volatility. There's going to be some downside periods. But I think this was really confirmation of a much larger rally to come. Even individuals like Dan Nathan on CNBC today that have been very bearish on Tesla say, hey, from his perspective, he thinks Tesla can go through a much larger rally heading into the end of this year once we get into especially the seasonal positives for Tesla, specifically October, November, December. Very strong months for markets, but historically very strong markets for Tesla as well. And he basically says, like last time he flipped to being bullish on Tesla in January of this year, the stock went up over $100. He's saying that something similar like that could happen again. Now, I think it's really twofold, okay? I think Tesla in and of itself is going through a very hyper growth period in their other divisions of their business, right? Their AI business, like Robotaxi and Optimus, are developing quickly. Robotaxi is going to continue to scale, and I think like yesterday's news of getting permits to start operations or test operations in Nevada. I think we're going to get a lot more news like that into the end of this year and especially into 2026, where again, you have this mix match where Tesla's doing all these great things with AI. Wall Street has not been paying any attention to this. And I think the pendulum's starting to shift towards Wall Street paying more attention to Tesla. We've also recently had Elon Musk's compensation package that is up to an $8.5 trillion market cap, which is massive upside from today's market cap around $1 trillion. And it all has to do with AI. Even Robin Denholm said today, like Elon's compensation package, whether he gets paid or not, is predicated on Tesla being very successful in AI. If Tesla is not successful in AI, Elon is going to continue to work for free. Like, you put it like that, and the odds of substantial upside increase. So as we've talked about on this channel many times now, especially in September, but pretty typically, Wall Street doesn't catch on to things quickly. Like, we go over news on this channel daily when it comes out, when breaking news happens, but a lot of the time Wall Street doesn't understand the news. It doesn't get reflected in Tesla stock from a Wall Street perspective until days or even weeks later. I think today's move was really a combination or a culmination of a lot of good news now that is starting to be reflective a little bit in Tesla stock. And I think this is the start of a larger rally to come. Now, you also have to understand that we are now in a place where, yes, it looks like the economy is weakening a little bit. We need to be watching that because if there's too much weakness, we're going to go through a growth scare and we're going to have a 10% correction at least. But we're getting just enough weakening to have a series of rate cuts. We're pricing in a rate cut at the next 4 Fed meetings heading into January. If we get further weakening, we're going to price in more cuts, maybe larger cuts, all of that. We're going to get a new Fed dot plot coming next week when the Fed cuts rates. And I believe it's the 17th, which is Wednesday, if I'm not mistaken. I think that's correct. But we're also going to have a situation where I think about mid-year 2026, it's going to be obvious the consumer is starting to recover a lot. I think real estate is a big hidden catalyst. It's something that not a lot of Wall Street talks about or incorporates into the bull thesis, but I think that could really help consumers get healthier. For anyone that owns a home, you're probably up a lot in equity on that, but you might be struggling on a day-to-day basis, right? Imagine you're now in a situation where you can go out and buy another home at roughly the same mortgage, but you can sell your current home and take $50,000 or $100,000 to the bank. You don't think that's going to help the economy or the consumer? You bet your ass it's going to. Now, there's a lot of provisions in the big, beautiful bill. No tax on overtime, no tax on tips that are going to save thousands of dollars. Basically, what it's going to do is it's going to give people a larger refund back around March, April, May, June of next year. So that's where part of the thesis comes from. About mid-year next year, it's going to look like the economy is reaccelerating. The consumer is reaccelerating again. There's also provisions in the big, beautiful bill for tax write-offs. And from a corporate level, you can go out and invest in more equipment and manufacturing plants and things like that and actually write that off the first year. So there's a heavy incentive to invest domestically in this country, okay? You have a situation where I think inflation is going to continue to come down. You're going to have trade clarity, whether that's the courts shoot it down and there's smaller tariffs or whether the tariffs hold and trade deals come along. I think really by the end of this year, you're going to have clarity on that. And that's going to help fuel the rally into next year alongside all of the other catalysts that I'm talking about. And then finally, like to cherry on top, AI is alive and well. Whether you see that with Oracle earnings or Tesla's application of AI, like robotaxis, AI is alive and well in this country. The investment is going to continue. Could there be another DeepSeek moment at some point? Yes. In fact, it's highly probable that we have another DeepSeek moment where there's another AI growth scare at some point. But I don't foresee that in the next 3 months, and I don't foresee that in 2026. I think there's a larger risk of this market turning into a bubble than another DeepSeek-like scare for AI. And I think that's the largest risk for this market, okay, is some kind of black swan event in AI goes sentient and like does something it's really not supposed to do, like AI shuts itself off at OpenAI, like starts doing some crazy shit, that would be a risk. That could be a black swan event. But I think it's more likely the markets actually go through a bubble phase where stocks go up a lot before we get another like DeepSeek moment. And I think the DeepSeek moment, now that we're speaking of it, the next big shock panic event in AI is going to be once one model goes sentient and like doesn't listen to the creators, and like you have to physically turn off the model. And then there's like, is that even possible? Like who has already copied the model? And you know, that's where you get into like doomsday situations. Eventually something like that will happen, but I don't think it's going to happen in the next 3 months or the following 12 months. So the next 15 months, I think, is going to be one of the strongest, best periods for markets in terms of performance and individual performance and portfolios than we have seen in a very long time. And I think Tesla's at the epicenter of that as Wall Street starts to understand the opportunity in AI with Tesla. I think this is literally just the start. As I've talked about before on this channel, I could see Tesla a $900 or $1,000 stock by the end of next year. And honestly, it could be higher than that. Just depends how the robotaxi scales and if there's any accidents or not, or all of that, how much it contributes to profitability. Does Tesla start to break down individually, you know, AI revenue or robotaxi revenue, and how much of my broader market thesis comes true? If my broader market thesis comes true to like spot on and Tesla executes, Tesla's going to be like a $1,500 stock next year. Like we're going to have a pretty euphoric market. Assuming that I'm not 100% accurate with my macro thesis on the economy, which I very well could be, but assuming I'm like 50% correct or 60% correct or 70% correct, which I think is more logical on a probability range, spectrum, and Tesla executes the way that I think Tesla will execute, Tesla could easily be $1,000 per share next year. And that's where the opportunity comes in today, as Tesla is about to hit that $400 marker. And as we've really broken out to a new range, this is the first time we've been above $367. That is not like a full-blown short squeeze. That is like Wall Street coming around to the idea and seeing the progress of robotaxi. Before Tesla, Tesla's never been this price with a robotaxi in existence. Tesla stock, I should say. It's never happened before. Wall Street was speculating before what the Trump administration would mean for Tesla, and now we actually have things that are very much working for Tesla, like robotaxi, which again did not exist the last time Tesla was at these levels. So I do think it's a big shift, a big change. I do see a lot of upside ahead for Tesla. Now take a listen to what Tom Lee just said about this market, because again, you got to remember, if the markets go through the shitter, it's not going to matter what happens for Tesla. Tesla's going to fall because it is a stock that participates in this market. Assuming I'm correct, assuming Tom Lee is correct and stocks do well, then Tesla's going to do even better. Let alone if Tesla gives us more good news, it's off to the races.
Again, all three indices hit record highs. It's a very slight pullback, but what do you think the catalyst is for the pullback this morning?
Well, I think it's normal to expect some profit taking. I mean, we just made all-time highs, and, it is the weekend. But to me, we know that since April 2025, any of these pullbacks have been really shallow. And, next week, we know that there's something very important to watch. And I'm sure a lot of people are going to be hesitant, but we know that ultimately it's a good thing when the Fed cuts.
We have a lot of people in general that are concerned about over-concentration in the market. Ironically enough, we had a guest on earlier, Julia Herman from New York Life, that was saying that concentration was a good thing. But the valuation of this market has been a concern for a lot of people. But your word of the day is undervalued. What's undervalued right now?
Frank, I think Oracle surging 41% after they report earnings tells me that AI is an undervalued sector, because how else do you explain a stock that is as large as Oracle gaining as much as it is, unless it shows investors are really underestimating the future growth of AI?
Just to be clear, what's undervalued? Are we talking about the chip sector? Are we talking about software? Are we talking about the hyperscalers? Are we talking about the Mag 7? Or is it everything in your mind?
Well, I wouldn't want to be too specific because, AI is still a 5 or 10 year story. And so I wouldn't want to be trying to drill this down into just a really narrow set. I think AI as a theme is continually underestimated because I think a lot of people think this is money being spent without return. But Oracle is showing you that there's a lot of future growth.
So with that in mind, Tom, your pick for us today is the IWM ETF, a small cap ETF. If AI is undervalued, why aren't you saying your pick for us today is a Palantir, an Oracle, a Vistra that helps power some of these data centers? Why are you going to the small caps?
Well, a couple of reasons. First of all, Frank, it's because exactly as I said, I wouldn't want to try to pick a slice of AI to talk about being undervalued. But if we think AI is undervalued, what's even more undervalued is small caps because that's been held at bay because the Fed has not been cutting rates. Fed's been on hold all year. And for the first time since last year, the Fed is cutting in September. A September cut after a pause has only happened in 1998 and 2024, and both times were good periods for small cap stocks.
So a question to you, though. The same weakness in the economy and the job market that's leading the Fed to cut, doesn't that directly impact small caps?
Well, I think that we want to not be like oversimplistic and thinking about this. Number one, what is the Fed going to try to accomplish by cutting, especially if they're worried about the employment market weakening? They want to get the ISM to actually go back above 50. They want corporates to start hiring. They want businesses to be confident. So this rate cut is not just a symbolic cutting of interest rates for mortgages. It is really an attempt by the Fed to get the economy to grow again, to actually increase the job market. That's really bullish for small caps.
Which, again, what's good for small caps is typically good for Tesla as well. Tesla is obviously not a small cap, but it is a very high beta company. It is a very risk-on company like a lot of small caps are. Hit that like button, subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. If you want to come trade alongside us, come invest in small cap AI stocks before anyone discovers them. We want to be first. We want to be right, number one. We want to be correct on the thesis, but number two, we want to be early. We don't want to be mid-cycle. We don't want to be late. That really kills the return potential. So we're trying to minimize risk by being early and maximize reward by being correct. Hit that like button as well as subscribe to the channel. Have a great rest of your day, and I will see you in the next one.